Jeff, this has been hugely helpful.
Oh, thanks, Stephen. Where are you from, buddy?
I'm in Durango, Colorado.
A beautiful, beautiful area.
And I go by Steve, by the way.
All right, Steve. Awesome. What's your favorite part been?
Oh, just learning about IULs in the first place. Just, I'm fairly new to the business, so wanting to go out and start hitting businesses up as opposed to
yeah. So I should I'll give you a little spot here on businesses. So whenever you get a business involved with IULs, you probably want to get their tax professional included in the conversation. And this is why it's standard operating procedure for a business, for a company to write off insurance premiums, key man insurance, right? Well, there's also what's called Section 162 of the IRS code that allows for an executive bonus plan. So what does that mean? So I'm not a tax professional, nor do I pretend to be one or play one on TV, but I kind of know how these things work. If, say, I'm making $120,000 a year, and I'm all of a sudden I meet Steve, and Steve wants to sell me an IUL for tax-free retirement. Well, what I can do is I can have the company or the trust that owns the company own the IUL. And then if, for easy math, I went to public school, if the yearly premium is $20,000, the company can write off the $20,000 premium. Now, me on paper as the key person, as that employee of the company, I can on paper go down to $100,000 a year of income. And then I get an executive bonus for the $20,000 or the exact amount that the premium is for the IUL. And then I can transfer that IUL from the company to me personally because I paid the taxes on it. Okay. So you can you can write off your retirement. Okay. Or if you wanted to use the infinite banking concept, if you needed to borrow money out of that IUL, pay the IUL back. I don't believe in, borrowing up to 90% like a participating whole life. That's a dangerous spot. But if you have $500,000 of cash value, you want to borrow out 50 grand to buy a pickup truck or something for your company. Absolutely. So there's some really good advantages. Now I say that with disclaimers, get that tax professional involved. I don't have a master's in taxation. If you do, awesome. But those people are really smart and they're pretty awesome. Yeah, they're pretty smart folks. But a competent tax professional will know exactly what you're talking about, and it's a tremendous advantage to the client. Tremendous.
Well, I was planning on just using it more as a employee retainer. Keeping employees there. Instead of doing a 401k. Do this.
Yeah. And that's the secondary approach. I usually like to get the biggest one I ever did was on a flower shop in Bakersfield, California. The guy did all the wholesale flowers from basically Fresno down to LA, that Central Valley area. He did a split dollar, whereas employees paid $100 and he did a split dollar, which he can write off that to the premium too. And it's kind of the golden handcuffs. There's a lot of paperwork involved in that, but I've had really good success with that in my day.
Great. Thanks.
Yeah. Anything else before we get rolling? The college funding one doesn't take a tremendous amount of time, but any other questions, comments, things you want to go over?
Hey, Jeff, I have something. It's Joel.
Yes. Hi, Joel. Hey.
With everything that's going on with cost of gas and inflation and fear in the news and everything, what are you saying to kind of calm people down and so make them feel more comfortable about doing anything at this point?
Well, I don't want to calm them down. I still want them to get excited. I still want them to have fear on the other side. I don't really want to calm them down. What's happening with the markets? They're going up and down. Mostly down last couple of weeks. Okay. So I don't want them to get comfortable. I want them to have fear, because if we can do a tax favored risk-free retirement strategy, that's probably what people want right now. People want to hear guarantees. People want to hear safe, secure protection. Okay. That in the geopolitical world we live on, and literally watching wars from our phone, I think saying those words that are true, we do have downside protection. It is risk-free. It is tax favored. It does protect your family and protect your income. I think those highlights of this plan are probably a little bit easier to sell right now than ever before. That's kind of my take on it. You know, I don't, other than my job, I don't care what the stock market does. In fact, I kind of want it to go down sometimes so I can get the big jump on the next year, right? So that's a good thing. And that's a good thing in IULs and annuities, and right. So good question.
Yeah. Thanks.
What else? Anything else? Yeah. Awesome. Anything else? I heard somebody breathe like they're going to ask a question. I heard it. All right. So let's talk about college funding. So I don't know if anybody, maybe Mark knows, but I don't think you guys know me that well. I have 2 kids. I have an almost 21-year-old stepson, and I say he's mine because if he screws up, I got to pay for it. So he's mine. He's a senior at Grand Canyon University in Phoenix, Arizona. And then I have a 12-year-old daughter. So Crease and I met Parker when he was 3. Crease already had a 529 in place. A 529, for those of you that don't know, it's kind of like a 401k for education. It's a deferred tax vehicle where you're deferring taxes till later. If you use it for education, you don't have to pay taxes on it. It's cyclical. It's based in a market investment, and you put money in there, and yeah, you literally just put money in there, and hopefully it goes up with the market. Now, I went back and checked. Let me see who that is. Oh, good job. I went back and looked. So Crease and I put a little over $70,000 of our money in Parker's 529 plan, and it grew to just shy of 150. And we have one semester to still pay for out of he's going to borrow the money. I'm done. I'm tapped out. So it did a great job. I mean, the money more than doubled over that time period. Obviously, you guys know the markets have been on fire. Well, right before we saw coronavirus 2 years ago slip down. Okay. And I said to Chris, I said, we're not doing this with no elegant. We're not. I preach this stuff. I'm gonna live by it because I already have my IUL for retirement. So I literally opened up F&G, and I'll show you how to structure it and what it looks like. And I put in $200 at the time Noelle was 9, and I literally put in $200. I'm like, I'm doing it. I just pulled the trigger right then and there, because the benefits of the IUL are incredible compared to a 529. Those benefits are, if she's 5'7", she just turned 12 years old not too long ago. She's 5'7", so if she gets a volleyball or a basketball scholarship, which she won't, but if she does, I can use the 529 plan for retirement. She could use it for maybe a little bit of infinite banking. Okay. It doesn't have to be used for education. What if she becomes an insurance agent like her old man? Okay. My degree hangs on it's a paperweight. It hangs on the wall like a paperweight. Okay. What if she doesn't go to school? All of these things are benefit. What if all of a sudden the market tanks? Okay. We don't have to worry about that. We were lucky with Parker that the majority of the money we put in was during a market uptick. So many more benefits to an IUL. Excellent. Over a 529. So what I'll do is I'll show you. I will show you exactly. If I can find my cursor here, what's going on? My cursor froze. Uh-oh. I don't know what's going on, guys. I can't find my cursor on my screen. I think I paused. I completely froze. You guys there?
Henry, your mouse might be dead.
No, everybody's frozen on my machine. Everybody's completely frozen. So I think I gotta
refresh the page. Refresh the page, the top.
I got it. I got it. I couldn't, my cursor wouldn't even move. There we go. Can you guys see my screen now? All right, cool. I don't know. I just completely froze up. It was really weird. I couldn't even find my cursor. So I couldn't refresh anything. All right. So this is what I did for Noel. So
Do you write policies on your immediate family?
yeah, you can write policies on yourself. I wrote a policy on myself, written them on my kid. So Noel at the time was 9. We were in California, so it's not, I haven't changed that default yet. And we do pass setter. Okay. So we standard juvenile underwriting class. Can't pick anything else. We solve for max accumulation and income always. We know the premium, so we're going to solve for face. Nope, there's no commission cut if you write it on yourself. Okay. Do a monthly premium of $200 a month. We're going to pay until she's 24 years old. So what I'm going to do is I'm going to have her borrow the money, or I'm going to borrow the money on her behalf. Have her build her credit. Okay, she'll probably borrow it. I'll co-sign for it because of FAFSA. Pay until she's 24 years old, 23, 24 years old. Okay, because after school, they give you a grace period after the kid graduates. We're going to start income at 24. We're just going to have that last 20 years. Then we're going to solve for a second income in retirement at, let's say, age 70, and make it last until she's age 100. So I'm going to say 20 years of using the loan provision to pay back her school loan. And then at 70, she can take it out for retirement. Okay. We're always going to use those 7702 rates. We're going to do option B to A, increasing. I'm going to change it back to level at age 24 when I stop paying. Okay. Come down here. We're going to do 100% in the Trailblazers. We're ready to roll. Now remember, I came out of pocket it was like 71 and change for Parker. And we still don't have enough for him to complete his schooling. Grew to just shy, I think, 150 grand. Can you guys see the illustration? You guys can see F and G? Yep, awesome. Okay. So what I did here, okay, is this thing will grow to around 154,000 bucks. I'll be able to pull at least $500 a month out of this thing. The $500 a month will pay back her student loans. So, and I only came out of pocket. Look at this, guys. I only came out of pocket 36 grand. That's a heck of a lot better than 70 grand. Okay. Borrow the money, use this to pay back the loans. That covers the loans for $131,000. And I haven't paid a dime. I won't pay a dime after she's 24 years old. Look what she can pull out at 70 for retirement. Phenomenal. Phenomenal. Okay. So not only did I give her $130,000 worth of basically student loan equity or whatever you want to call it, pay that loan back, build her credit, and I've jump started her retirement. Yeah, inflation in 62 years from now is going to be a little different, but I wish somebody would have done that for me. All tax-free, not tied to education. And if she doesn't use it for school, well, then this is going to be one heck of a huge number right here. Okay. So I think if you show this to people and dovetail with that, dovetail in the protects your family, protects you from market risk, protects you from unnecessary taxes, and protects you from outliving, it's a phenomenal tool. Anytime I've sold one of these, I've either sold the parent an IUL or I like rolled some money and then they're like, hey, can I do this for myself? Absolutely. Yes, you can. Okay. So any questions on that, how to position that?
Hey, Jeff, Mohammed, quick question.
Hey, yes, sir.
So you designed this in a way wherein after you stop putting money in at age 24 of your daughter, you no longer put in anything even after she can afford to put a little bit more in the future?
I could transfer ownership. She could pay back her loans. Absolutely. She could. Like, so let's say she got a job. Let's say she got a job where she didn't have a match on her 401k. I could transfer ownership to her and say, hey, just pay yourself back here. And then this will be even higher.
Yeah, okay. So no more premiums after age 24, correct?
Yeah, look. I mean, 30. Here we are at age 99, $36,000. We turned $36,000 into, call it 2.8 million dollars. But if she lives to 99, if she lives to 79, we took 36,000 and we turned it into like what, 1.2?
Yeah, basically.
That's the
Jeff,
power of IULs for young people. Yes.
Jeff, were you the insured on the account?
No, my daughter is the insured.
She was the insured. Okay.
I'm the owner.
You own the policy though. Okay, got it.
Well, here's something cool, guys. Look at this. I'm the owner of this. I'm the owner of this. Okay. So let's say, I don't know. Let's say in 30 years, I need some money, right? Let's say I can come in here and borrow from this thing. I wouldn't do that to her, but if God forbid, let's say she didn't go to school. Let's say she didn't go to school, and then all of a sudden these numbers keep climbing. Okay. And let's say here there's 100, let's see, 30 years from now. 30 years from now, let's say there's 160, this number is 163,000 too. Well, I know I can pull 10% of that out the rest of my life. That's a rule of thumb. I could supplement my retirement by 16 grand. Let's say she got a scholarship and went to school, or she became an insurance agent. She just crushed it, did her own retirement, wanted to go crypto and didn't even care about this or whatever it was, right? I could use it for my own retirement because I'm the owner of the payer. She's the insured. Why did I make her the insured?
Cost of insurance is much less. She has more time.
There you go, Steve. Yep. Time and that remember that three-sided triangle. Time, money, and age. Age determines cost of insurance. Good job.
Hey, Jeff, I have an
Yes.
important question on this.
Yeah.
So I just submitted an application for a young lady, 39 years old, completely healthy, except she has bipolar disorder.
Okay.
She was declined
Okay.
because of that.
Mm-hmm.
But she has two young kids.
Mm-hmm.
So we could reapply for them and basically do the same thing that we were going to do for her, because she could use the same money for retirement and everything, just like you just said, right?
True. There's some caveats here. F and G, some carriers like to have the parents to have double the insurance face amount, double the face amount on themselves than the kids. Kind of have to, I mean, if you have a kid and all of a sudden you've got $3 million of life insurance on a child, that's kind of weird, right? So they will ask you about that. I know if you're probably going to write F and G, I can talk to Ben and say, hey, Joel Edelson's writing a policy. It's for college funding. The mom was going to do it on herself, but now she's doing it on the kid. We have a little bit of play there, not a ton of play, but we have a little bit of play where we can justify those amounts. That makes sense?
Yeah.
Jeff,
Go ahead.
Jeff,
Hold on, Bobby, hold on. You can, but hold on. Does that make sense?
No, it does. And if there's
Okay.
a way, even if I can get some like John Hancock or some kind of just basic term coverage for her, that would help.
I'm going to tell you, I am not the guy to ask about term, and I'm not the guy to ask about if people qualify or not. Because in my career, I've dealt with young, healthy people. Haven't dealt with old, unhealthy people. Okay, Bobby, go ahead.
Jeff, that's a great point. I actually ran into that on a specific case where I shifted gears for health purposes. I was able to overcome that by writing a $500,000 accidental policy. So when I did submit the child policy, I did submit it with the information regarding the accidental policy and the amounts, and it went through smoothly with no issues whatsoever. Awesome. But just a little tip, and that will also add an additional policy to your numbers.
Yep, cool. Good work.
Yeah, good job.
And I had a similar. Oh, go ahead.
No, go ahead, Mohammed, and then we'll take Shelly and Steve.
I had a couple of scenarios too, where the parents only have a group term life insurance from work, and it went smoothly as well. So if the parent has a job that offer her a life insurance, you can also use that as well, saying parents already has life insurance.
Okay, cool. Awesome. Yeah. Shelly, go ahead.
Okay. So this may sound funny, but can you have two IULs on the same child? Let's say the mom and dad were divorced and they put an IUL on them. Can the other parent do that as well? Can you put two policies on a person?
Yeah. Nelson Nash had 45 policies on himself when he passed away and had over $1 million of outstanding loans.
Whoa.
Well, his death benefits got reduced accordingly, but he had 45 participating whole life policies on himself. He did.
How many of those were with the same carrier?
I don't know that. I don't remember. I read the book, but I don't remember that being in the book. But I know he had 45 participating whole life policies on himself and had $1 million of outstanding loans when he passed away. Steve, go ahead. You were so patient. Thank you.
Hey, Jeff.
Yes, sir.
So flexibility for these, like, you say, hey, I'm going to pay on my daughter till she's 24 and stop. She could in turn come in and start paying if she wants to at age 30.
Yeah.
Or not pay, obviously. So I guess there's tremendous flexibility in, I think, these plans. And what are some things that they cannot do, I guess, from, what would you not tell a parent for a child? Because you're talking, right here, I guess we're talking children,
Yeah. I don't know. It's a really good thing for the kid. I'm trying to think of a negative aspect. I don't really see a negative aspect because I've lived these numbers, right? I live them. So I don't, I guess if you started it and then stop paying and let it lapse would be an issue, because eventually the cost of insurance would eat it up. It would take a really long time. Whereas in a 529, if you started it and just let it sit there, it could get reduced due to market risk. But it would probably bounce around like this. Whereas if you stop paying on a children's policy, eventually it would take a long time, but because you set it up correctly. But other than that, I'm really struggling to think of something.
I agree. And I think it's like you talk to a person who has a 529 already started. Hey, Jeff, why am I going to switch? Why would I need a change? Can I have both? Of course you can have both.
Yeah.
You know, I think it's kind of getting over that hump of people having that mindset of, you know.
Here's another one. How many people have kids in school? Anybody else have kids in school? So you guys know, college age kids, you guys know that you need a proctologist to get those FAFSA people out of your life. Okay, right? I mean, it's not fun. They want to know every single. So it doesn't count against FAFSA because money inside of a life insurance policy doesn't count. Probably doesn't help most of us, but it's that's there too. What other questions you guys have? That's a good one.
Jeff, the question I have in reference to using IUL for college funding, because that's what I have for my kids 3 years ago.
Yeah, good. Awesome.
And the question is, how do you market it to us with the competition out there, the 529? What is normally your go-to when you're talking to a client, when you're trying to compare?
So I'll do something like this. Role play with me a little bit here, Mohammed.
Okay.
Somebody said to email that. Remind me. I'll email it over to Mark, and then he can get it out to you guys. I don't have everybody's email. So okay. So how much you gonna put away? Let's say they're putting $200 a month away.
Okay.
And they get, I don't know, 8%. Oh no, initial investment zero, 200 bucks. Let's say they get, let's say they're nine. So what, 13 years? Is that right? 13 years, say 15 years.
Okay.
Estimated interest rate, 8%. Okay. Calculate that up. They're going to come out of pocket 65 grand. Okay.
Okay.
In a 529 plan, what the hell are you going to do with 65 grand? That's 2 semesters. Right?
Mm-hmm.
That's 2 semesters. Okay. So how many years was that? Let's do an apples to apples here. I don't know if it's a time change. My brain went blank there for a second. Usually, I apologize. Usually I don't look at my screen there. So how long did we put that in for Noel?
15 years. That example you just gave.
Yeah, 15 years. Yeah. So 65 grand. I'm coming out of pocket instead of 65 grand, or instead of the same amount. I'm coming out of pocket the exact same amount. Sorry, stop share. Where is it? There it is. I'm coming out of pocket the exact same amount in 15 years. I turned my 36 grand in this illustration. I turned this just for college funding. I turned it into 131,380, and that's 8%. Same amount of money out of pocket. I turned my 36 grand into 131, not 65. Actually, if this came to fruition, I did it this way, and my daughter lived to 89. I turned my 36 into almost $2 million, $1.9 million. You want 65,000, or do you want 1.9 million? I mean, that's like a drop the mic and step on it, right? So that's how I would market it. I would say, look, you could come out of, we're going to come out of pocket $36,000. Do you want 65 in a really good market situation? Let's call it 70, even 100 grand. Whoa, I'm still going to knock the socks off of you. Okay.
Yeah.
At 131, by borrowing the money from the participating whole life, borrowing the money from a bank, using this to build the kids' credit, put them as a what you call it on the loan, And I only came out of pocket 36 grand, and I paid for the whole dang thing. And I gave him a retirement.
All right, it makes sense. And another thing I normally add to the parents sometimes, because usually you meet some parents, oh, I can only do $50. What I do, I go to American Funds, their website, they have a college calculator. You put the kid's age, and you ask them what college they anticipate their kids are going to go to. And I input the college, it projects what it's going to cost. Sometimes that make, whoa, I was trying to put $50, it may end up costing over $200,000. They increase whatever they were planning on putting down. They would probably say, okay, do $100, $150, $200 now, because it's going to cost a lot more.
Oh, I can't even imagine what college is going to cost. Yeah.
One of the things too, guys, that I like about the IUL versus the 529, if you didn't mention, Jeff, and I'm sorry if you did, I stepped out for 5 minutes.
That's all right.
But the fact that a 529 you have to use for college or you are penalized.
Yeah.
Right. And in this day and age where I'm not diminishing college or the importance of university or college education or what have you, but there's a lot more moving toward entrepreneurship, skilled trade, things like this. And let's say you feed into a college, you just really prepared, you feed into a 529 since the day they were born, and they turn 18 and they say, I don't want to go to college. Oh, great. What was all that for? Right. So in IUL, they can use it for whatever they wish. And it gives them the freedom and flexibility of knowing they can do whatever they want with their life. But this is intended for college kind of thing.
Yeah, absolutely. Yeah, I say the joke. I say, what if she becomes an insurance agent like her old man? And the guy, seriously, I was a double major, political science and geography. It really helped me finding people's houses. Like I could really get directions to their house.
Right. Film school did a ton for me here. So
yeah. Yeah. See, we have these degrees that we don't use. And I wish I would have grown up saying I want to be an insurance agent. I'd have been ahead of the game.
Thank you. I love it.
Yeah. Or if they get a scholarship. I'm going to tell you how hard it is to get a scholarship. My kid actually has a partial scholarship for golf at Grand Canyon, and he's the worst golfer on the team. He is. He's on the team, but he's the worst one on the team. It's really hard. He's got 25% scholarship, and it's really difficult. And the kids that have the full rides are real good.
That's excellent.
Any guys have anything else? I mean, I'm here, guys. You got me for a half hour. I don't care if it has to do with kids policies, IULs in general, anything you want me to go back over.
I would love the opportunity to take a really good look at that illustration that you put together. That was very impressive. I've been fooling around with that tool a lot. I've put together several, and I haven't put one together that quite looked that good with just $200 where it was multi-purpose like that. That was pretty strong. I would love the actual illustration.
I'll email it to Mark, and he can distribute it out to you guys.
I'll get it out to the group. Thank you.
That was strong. Yeah, that was a great illustration. Thank you.
Yeah, this is fantastic. And guys, Jeff's very generous. We finished a little early, but I'd love for you guys. I mean, this is it. Jeff's been highly accessible, and we're grateful for that. And of course, you always have access to Jeff through Quility. But this is our last session with Jeff. So would love you guys to take advantage of that.
Unless you want to start annuities. There's a lot of annuity around the company.
I'll tell you, Jeff, this was really great. I want to thank you. Mark, thank you for putting it together. Thank you.
Jeff, quick question. Any marketing materials for college funding with Symmetry? Like flyers and things of that sort?
No, I'm not the biggest flyer guy. And it's probably a flat spot in my rock. But I'm not the big flyer guy because they're not buying Fidelity and Guarantee. They're not buying, anything but you. I want to be in control of it. Everybody on this call is talented. Everybody on this call has success in sales. They're buying you. They're not buying the colors on the flyer, the fancy thing. They're buying you. And I think the more you understand sales and the more you put yourself front and center and you are genuine to yourself. I don't want you to be Jeff Sigworth. I don't want you to be Mark Newbauer. Right? I want you guys to be you. Muhammad, you're a cool, likable guy. Like I enjoy you. I see you at my trainings. Like you want to get and talk to people. You don't want to hand them a flyer. You're a very charismatic, extroverted guy. Go sell that sucker. Show somebody the value. They're
Yeah,
going to
I do
buy
a lot
you.
of door knocking, so
And that's
COVID
good.
halted me a little bit. Yeah, but I
They're
do a
gonna
lot
buy-
of door knocking. Yeah.
They're going to buy you. They're going to buy you before they buy anybody else or anything else. So I would take confidence in that and rest on that. I promise you, you'll have success.
All right. Thanks.
Yeah, of course. And so, Mark, yeah, I've been doing some annuity training for some of the groups because while the markets are going down, there's a lot of instability going on. We can take, another 3-4 weeks. I got this time blocked off. If you want to start with annuities and kind of roll from there next week.
I would love that. I'm going
Let's
to
do
speak to William, whose call I hijacked for these 5 weeks, but I don't think he'll mind adjusting our call accordingly, our other call, because we are, and the time is perfect. I would love that, and I say yes if you're up for it, Jeff.
I'm up for it. I've got it blocked off on my calendar.
Awesome. Let's get
Steven.
into annuities, guys. I love it.
Steven, were you raising your hand?
No, I'm sorry. I was just saying yes, please,
Oh.
on the annuities.
Yeah, cool. I'm going to tell you guys something. I think, and Mike and I have talked about this. I think getting into DFL is a really easy sale. There's some moving parts to it. There's some follow-up work, but it's a very easy sale, especially with that DFL report. But if you can understand IULs and annuities, I'm telling you the concepts between Cheryl will tell you, Cheryl's DFL certified, right? DFL, IUL, and annuities. Once you understand one, they kind of dovetail together really, really easily. And a lot of people get afraid of annuities. Like, well, I need to start with a small one that with like 30 grand. Well, the only difference between a $30,000 annuity and a $300,000 annuity is 1 0. The math's the same, the product's the same, the illustration is the same, everything's the same about it. The only difference is 1 extra 0 at the end. That's it. Okay, so don't be afraid of them. Don't be afraid of annuities. They put their pants on one leg at a time too.
Bigger bucks too.
Yeah, and Steve, I'm gonna tell you, they are very lucrative, but don't get caught elephant hunting. Okay, I kind of elephant hunted in my career. I was lucky that I had an IUL market to go get, right? But if you got to try to go start elephant hunting and you don't shoot the rabbits and the squirrels and the turkeys, you could starve.
Yep.
Well, I'm gonna check the chat. I was ignoring the chat. Yeah, my email address is jeff.sigworth@quility.com.
Hey, Mark.
Yes, Cheryl.
Okay, so at the beginning of this, you said that you were going to put this whole series together and email it to us. Are you still going to do that?
Yeah, this is week 5 of IUL, and so
Okay.
we'll do an IUL series that I'm just going to trim the fat. Some of us show up early and chit chat and stuff like that. So I'm going to trim the fat, put some bumpers on it, give Jeff and Quility proper edification, and then I'll have the series as a private link on our YouTube channel, and you guys will all have access to that. And Jeff and I will discuss if that's something he feels comfortable making public, then we'll just leave it up there.
Awesome. You
I'm
guys
fine.
are the bomb. I'm telling you, absolutely fabulous.
I'm so glad you guys are getting the value that we hope to get out of this.
Yeah.
I was wowed by Jeff again 3 years ago. I never forgot his name or what he did or the impact he had on us in that room. Me and Steve and Bob Morris and Chris Judy were all there that day, and I never forgot it. It's good stuff.
Well, whatever Mark says is true.
Well, yeah, everything. No, but what I love is what you're doing is still part of what we have. I say this a million times, but it never gets old to me, is Brian Pope stood on stage at the 2019 Leadership Summit and said, Symmetry is evolving and mortgage protection is systematic. It's incredible income for those just coming in and want to work and build the business accordingly. But there's so much more that we can do here. And we're building the business so that if somebody just wants to come in here and focus on advanced markets, retirement solutions, debt-free life, we have a path for them. And that's the path that we're trying to create in this division, because I believe this resonates with some of us in such a big, big way. And for those of us doing mortgage protection, nonetheless, it's a great pivot. I mean, the mortgage protection is a great start, but as you start asking good questions, you find this might be a better overall solution for them.
So Mark, do you want to see behind the curtain a little bit?
I love seeing behind the curtain.
All right, I'll share some stuff with you guys. All right. So this is what my next assignments are going to be. Okay. So I'll do this one for you guys. So if you guys can see this, we're going to take the reset process where we do the financial fire drill, or FIF, and we're going to implement it company wide. This is what I'm working on, right? We're going to talk about the intro, the history of FIS, what we did at Assura, the goals, the increased profitability, the persistency and value add when you have multiple contracts in a home, how we're going to tie that to the summit that we learned about at the last virtual conference. Some quick start guides, what the agent's responsibility is going to be, what subject matter expert criteria and what their responsibility is going to be. So if you don't know annuities, or you don't know DFL, or you don't know IULs, you can set somebody within your reset somebody within your organization. Okay, what the agency owners, what upper management in the hierarchies, what my responsibilities are. Okay, and then we have training. What is an FIF? How do you take it? How do you read it? How do you break it down? Why we use the Socratic sales process. We're going to talk about pace, tonality, what the asset definitions are if you don't know, what looping is. We're going to ask some second layer questions, objection handling, and then the survey questions. So if I am asking, let's say I'm asking you, Cheryl, since I know you're DFL certified, Cheryl, it looks like you're making an overpayment to your car loan, your credit cards, and also your mortgage, correct?
Yeah,
Would you say that getting out of debt is a priority for you?
it is. It really is.
So if I could show you a way where you could get out of debt and build wealth without spending any additional money, would your retirement be more comfortable?
That would be absolutely amazing, Jeff, if you could do
Now-
that for me.
Now I didn't sell her anything. I gave her what she wanted. Okay. So it's those second and third layer questions, asking the questions, but you're just not an order taker. Okay. And then we'll have our certification classes, which you guys are already got one down. So when you take it, when you see it, and then I'm doing some of this stuff. So this whole process is eventually going to be automated. So check out this. So this right here, I think it'll come up. This right here, I'm putting together the logic on if you have a 403B, what's the balance? The next questions, if yes, if no, all this logic. If you have an IRA, if you have a DSP, if you have a pension, it talks about pension max and pension max and how to go to the survey. What is your survivorship options? All this logic on all the FIF for DFL. Here's the DFL, what to reallocate. It's literally going to be completely automated. So when you sit down in front of your computer, it's going to be like a choose your own adventure for you and the client.
Oh my God, that is awesome.
And that's what's coming soon with that. And that's going to be my responsibility to kind of head that up. And
That's incredible.
And you guys are already getting, you guys, I'm grooming you and teaching it in a way. So you guys are going to have a head start on that.
Easy.
Yeah, you guys are going to have a head start on that. Not only on the certification, because, it's pretty much going to be what we go over. We're going to also that FIF. That's why I put a lot of that FIF training. So you guys are going to get used to second and third layer questions. You guys are going to get used to resetting for a subject matter expert in your organization, or reset yourself. Like Jeff said, I'm not resetting anybody else. I'm resetting myself, right? I'm getting that. So the fact that you guys are here and wanting to learn, I love it. So you can reset yourselves for all these advanced market opportunities. That's a little bit what I'm doing behind the curtain and what's eventually coming here in the next quarter to 2 quarters.
Woo.
Any questions, comments?
Hey, Jeff, with reference to an IUL presentation, like a PowerPoint, do you have anything like that?
For what now?
An IUL presentation, like a PowerPoint presentation.
I do. If you guys shoot me an email, I can shoot that over to you. Do you want to? I can go through it real quick here for you. If you shoot me an email, I'll share it. I usually customize it. This one, where's the presentation? This one's just a generic one that I created, and I'll go through it with you guys real quick. That's the better view, I think. Okay. So what I'll do is I'll go in here and I'll customize it. So this is based on Assura stuff, right? Here's the companies we use. As you go in, and AIG, everybody's heard of AIG. Do you guys know why AIG paid back the money faster to the federal government after the 2008 financial crisis? It was because of the insurance arm of the company. F&G, best IUL carrier. Forrester's great company. North American, phenomenal company. Allianz, number 2 mover of money in the world. F&G, owned by BlackRock, number 1 mover of money in the world. And for those of you who some of you should know that the Eagles play at Lincoln Financial Field, so I gotta throw that in there.
Home office of Lincoln Financial is in Fort Wayne, Indiana.
Is it really?
It sure is.
They support my bird, so I got to go with it.
Fantastic.
We take advantage of Section 7702. We overfund a life insurance contract to pull that money out tax-free. We're going to kill 2 birds with 1 stone by providing a death benefit and tax-free income. I want you to think of this as a Roth IRA married to a life insurance policy, and it protects you in the 4 key areas, right? And we're going to go over those. Minimum death benefit, maximum cash value. So I'll put in here what their death benefit is, why it's a strange, uneven number. Okay, I'll put it right in here. It's the same money. I'm not here reaching in your pocket and creating another bill. You told me we were putting $500 a month away. I went down to 4 because it's going to go back in your check. That death benefit's 100% income tax free. It's 100% portable, and it's 100% tort proof or creditor proof. You can't litigate against a life insurance policy. Protected from market risk, never lose money. We look at the 65-year look back, the average annual return. We explain what cap and floor is, what annual lock and reset is, and then we look at some historical charts. Okay. Go back to, I haven't updated this in a couple of years, but if you go back to 1999, if you were on this chart, what line do you want? Right? The purple line, which is the market, you keep digging out of these holes. You got to dig out of these holes. The dot-com bubble, the housing bubble, right? This New York Life is the participating whole life. And then you have a CD. Okay. I saw this a couple years ago. I saw this on somebody's desk and I went, oh yeah, this is pretty awesome. Well, we know where the next the slope of that line is going to be, right? We know exactly what that slope's going to be. When is it going to happen? We don't know. Okay. I usually cut this out and snip in theirs, go over that. Then we talk about taxes. You think taxes are going to go up or go down? Why wouldn't you want to pay your taxes now and get it tax-free in retirement? It's a trade-off between death benefit and tax-free income. You give yourself a loan from that death benefit using the cash value as collateral. You pull the money out tax-free. Here's a visualization. That's hard to say. Visualization of our debt in $100 bills. That's $1 trillion. That's $15 trillion. That's $115 trillion. Now, who knows what our unfunded liabilities are now? Does anybody know?
150, isn't it?
It's right around 150. So think about putting two of these Empire State or Lady Liberty, Statue of Liberty, 2 of those piles up on this pile of money, and that's how much our debt is in $100 bills. Okay. Everybody's like, oh, well, my political party is going to get in. It doesn't matter. Okay. So why did we have a spike here in our federal debt? What happened during these years?
World War II.
Yeah, we're coming out of the Depression into World War II. Look what happens to tax rates. This green line's tax rates. Right around here, Ronald Reagan was president. Do you know that Ronald Reagan only did 2 movies a year? He made $100,000 a movie. He refused to do it more than 2 movies a year because he would only take 10 cents on the dollar because he would have been taxed at 90%. Move forward. We're at the third lowest. We're at the third lowest taxes have ever been. Back in here came the 401k. The tax rates were so high, people, in order to get money in the market, they had to say, hey, take the break now. We'll be in a lower tax rate in the future. But look what's happening to our debt. Now our debt's probably like, might even be off the page, right? Might even be up here by now. Okay. This line's way up here. So it doesn't matter what political party is in office. We're spending ourselves to oblivion. I heard somebody say something. It's a 4-letter word right now. The problem is debt. It's right. It's just debt. It's math. Okay. There's 3 types of money. Taxable now. What's a taxable now account? Give me an example of taxable now.
Life insurance.
No.
I mean,
Kind of.
you're paying your taxes pre-entry.
No, this would be like a savings account.
Savings
You're gonna
account.
get a 1099 money market savings account, CD.
CDs, yeah.
Give me an example of tax deferred account.
401k.
Yeah, easy. 401k, tax-free life insurance.
Life insurance.
Okay. Our products have safeguards built into them. I throw this up there. Right. Now I compare. Now I have this placeholder in there. Now I say, hey, remember that number you wrote down? That 13,000 or that 16,000? Yeah, now you got to pay taxes on it. What tax bracket are you in? Let's just say you're in a 15% tax bracket. That goes down to 13,000. Do you want $13,000 a year with no death benefit, or your death benefit runs out and the death benefit might be really expensive, or you can't qualify? Or do you want $26,000 a year with a permanent death benefit? Which one fits your life better, right? So I compare all those. I show that it does all the 4 things, and then I'm done. So that's the PowerPoint I have for the IUL. And I don't protect it, so you can make it super customizable.
That is nice, man. Appreciate it. I'll shoot you an email.
Yeah, shoot me an email, jeff.sigworth@quility.com, and I'll be sure to send it over to you guys.
All right. Thank you.
Yeah, of course, guys. It looks like next week we'll start with the annuities. And same thing. We'll start with what an annuity is and how do we find annuities, right? So kind of keeping that uniform approach to the different solution sets.
That's awesome. And guys, leaders on the calls, please note, I know some of you have even hired in the interim. We, when and if you feel your team are ready, we will have this full IUL collection bookmarked, so you can put your agents through the training series. But just the same, I encourage you, we're starting from ground zero with annuities next week. So encourage your teams to be on and learn a little extra something. So long as they're performing as you feel they should and could be systematically on the other side of things. This is a great next step. It's a great evolution. And again, all the way back to the SoundCloud, discovering annuities, right? With just a few questions. That thing's probably 5 years old at this point. It's still relevant. If you
it still works.
Right? You ask you don't have to know a thing except a couple questions. You ask the right questions in every appointment, and about 1 out of every 10 of those are going to be an annuity, and you're going to add about $50,000 to your bottom line in a year's time. So really, really important to remember. It's all about the process more than having to know everything. We got your back, right? It's all about the good questions and the process in the home, and you'll be astounded by what you'll be able to accomplish if you're paying attention.
We could even go through some of those reset questions, whether you're resetting for yourself, whether you're going to reset for a subject matter expert in your hierarchy. And those second and third layer questions are so powerful. And so, who can't ask 2 or 3? I mean, you passed an insurance exam. You can ask 2 or 3 questions. You're in sales, right? I mean, it's not rocket. If I can do it, it's not rocket science.
Well, and frankly, I think that's as simple, that's the simplest part of it, but I believe it's the most difficult for most agents to bridge the gap, right? Like you guys have learned all this stuff. The question is, how are you going to apply it? My suggestion is always find those guinea pigs, right? Those same people that would help you move for beer and pizza are the same people that will sit down for 20 minutes and let you practice. I highly encourage you to do that. But outside of that, next level is simply learning these questions, the right questions to ask in the right situations. And again, you'll be amazed at just how quickly you get through it, because not knowing a thing about this, if you just know how to ask the questions and they say yes, or the equivalent of a yes, great. You have time to go backstage, call F&G, call me, loop in a call with Jeff, and figure out how to make that happen for them. Philip Lawton, who's not here today, but he's on our team. Great example. He was doing a mortgage protection. The guy said, I really want something that builds cash or at least helps me put off taxes. Philip thought an IUL was appropriate. Turned out it wasn't, because the guy wants to actually defer his tax situation. So we pivoted to annuities. And frankly, I don't know much about annuities, guys, hardly anything, maybe that much more than Philip did. But we covered it. We said, okay, what do you want to accomplish? He told us. We said, we'll get back to you next week. We called F&G. They walked us through everything, gave us a couple different illustrations, explained every line. They're your teachers. They get paid by the hour to teach, right? It's up to us to give them a call and request the education. So Jeff, anyway, I thank you so much.
Yeah, thank you guys.
Closing out IULs, anybody, any last questions other than just thank you to Jeff Sigworth and his generous donation of time here for us?
They pay me to sit here, Mark.
I love it. Oh yeah, that's right. He's just like the guys at F&G.
Yeah. I love working with you guys. You guys are great. Thank you. Need anything, reach out to me. I'm available. Got my email. You guys should take down my phone number. Might as well have it. It's on my email anyway. It's 916-517-6514. All right, guys. Take care. I'll see you soon. Next week, annuities.
Love it.
Thanks, Jeff.
Thanks, Mark.
Thank
See
you.
guys.
Thank you guys.
You got it.
Thanks,
Bye-bye.
Jeff.
Thank you.
Thanks, Mark. And we'll see you guys next week.
Looking forward to it. Take care,
All right.
everybody.
Bye-bye now.
Leaders, remember, encourage participation. We'll see you next week.
Thanks again, Mark.
Thank you.